The impending mergers will boost the total addressable market and support revenue growth acceleration. These are the merger stocks to buy before they surge higher on inorganic growth and cost synergies. Chevron Corporation. The impending merger of Hess Corporation will boost the oil production outlook and cash flow potential. Synopses. With the acquisition of ANSYS, the total addressable market has increased by 1.5x to $28 billion. The Home Depot. The acquisition of SRS Distribution will double the addressable market to $1 trillion and will support growth acceleration. Let's dive in. Here are the 3 stocks set to surge higher after an impending merger is completed. Welcome to Timely Investment Research. A research report from 2017 indicates that mergers and acquisitions have created more value for acquiring firm shareholders post-2009 than ever before. This particularly holds true for mega deals worth $500 million or more. It's likely that this research holds true today. Therefore, looking at companies that have impending mergers can be a good basis for stock selection. This video focuses on 3 merger stocks that are likely to fly higher once the deal is completed. It's worth noting that the global value of M&A activity in the first half of 2024 was $1 trillion. On a year-on-year basis, M&A activity has increased. Further, there were 10 megadeals $10 billion or higher in first quarter 2024. With significant level of M&A activity, there will be potential value creators on the back of merger synergies. Let's discuss 3 merger stocks that are poised to trend higher once the merger is closed. Number 1, Chevron Corporation. Chevron Corporation stock has been sideways over the last 12 months. The 4.13% dividend yield stock looks attractive from a valuation perspective. Further, there are 2 potential catalysts that can translate into a big rally for Chevron Corporation stock. First, there's a possibility of multiple rate cuts in the next 12 to 18 months. Expansionary policies are positive for energy prices, and as oil trends higher, I expect Chevron Corporation stock to rally. Further, in October 2023, Chevron had announced a deal to acquire Hess Corporation for a consideration of $53 billion. This deal was approved by Hess shareholders in May 2024. However, the U.S. Federal Trade Commission has delayed the decision on the merger until after an arbitration case with ExxonMobil. It's likely to happen eventually, but the delay is a good opportunity to accumulate Chevron Corporation stock. Leaving this merger aside, Chevron has an investment-grade balance sheet and low break-even assets. The cash flow outlook for this merger stock is robust for the coming years, coupled with value creation through dividends and share repurchase. Number 2, Synopsys. Synopsys is a provider of electronic design automation software products that are used to design and test integrated circuits. It's worth noting that Synopsys stock touched 52-week high of $630, and from those levels, the stock has corrected by 13%. I see this as a good opportunity to accumulate. In January, Synopsys announced the acquisition of ANSYS for a consideration of $35 billion. The pending acquisition will combine leading players in semiconductor design technology and simulation and analysis. Further, the total addressable market for Synopsys will expand by 1.5x to $28 billion. Analysts expect the combined total addressable market to grow at a compound annual growth rate of 11%. Clearly, Synopsys will experience healthy growth upon the completion of the acquisition in the first half of 2025. Another point to note is that the merged entity is likely to deliver robust cash flows. This will help Synopsys deleverage with a target of 2x debt to adjusted earnings before interest, taxes, depreciation, and amortization within 2 years post-closing. As credit metrics improve, I expect Synopsys to trend higher. Further, there is a strong case for healthy dividends in the next few years. Number 3, the Home Depot. The Home Depot stock has been relatively subdued in the last 12 months. This does not come as a surprise with macroeconomic headwinds and higher interest rates impacting growth. However, with the possibility of expansionary monetary policies, I expect HD stock to trend higher in the coming quarters. Further, in March 2024, the Home Depot announced the acquisition of SRS Distribution. The latter is a leading residential specialty trade distribution company, and the acquisition is for a consideration of $18.25 billion. Notably, they completed the merger last month. However, the real impact on the merger stock will be seen in the next 12 to 24 months when macroeconomic headwinds wane. It's worth noting that prior to the merger, Home Depot had an addressable market of $50 billion. With the completion of the merger, the addressable market has swelled to $1 trillion. This puts into perspective the likely impact of the merger in the coming years. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.